Hello everyone, welcome to Adda 24/7 English channel. This is JIB CIB English channel. And as you all know that we have started our new series Champions where you will learn the concepts as well as we will practice few questions. You will get an idea of what kind of questions are being asked now in the JIB exams, and your JIB exams will be conducted next year in May 2025. And since you have your annual closing as well, within this time you should start your preparation now. So today we are taking up a second unit of module A of Principles and Practices of Banking, and we will be discussing here what is KYC, AML, guidelines. As a banker, we all know about what is KYC, because whether we are working in branch in operations or whether we are working in credit, we have to take the KYC documents. And we, as a banker, we have to know that what KYC is. It is know your customer. And why know your customer is important lies is important because you have to understand what is the idea behind that. Why KYC is such an important topic for all the bankers. So let's begin the topic why KYC is important. Before that, we'll be studying a little bit about money laundering and financing of terrorism risks. So what money laundering is all about? What money laundering is all about? Money laundering is a process whereby the origin of funds generated from criminal activities like drug trafficking and gun smuggling, etc. This originated from criminal activities. They are being, these monies are laundered. That means that the dirty money which was generated by criminal activities like drug trafficking, gun smuggling, or corruption, these are being converted as clean money. And this process is called money laundering. Terrorist financing has developed linkages with money laundering as both purposes, similar modalities are used. Terrorist financing, we all know about. It is about that how the terrorist activities are being funded. So in terrorist financing, we studied about how terrorist activities are terrorist activities are funded. Now these two things are interlinked somewhere, that because in money laundering, first the illegal money, the from criminal activities like drug trafficking, gun smuggling, or corruption, these dirty money is first of all converted into clean money through a process called money laundering. And sometimes these money are also used for financing of terrorist activities. So these both are interlinked activities. Now, Financial Action Task Force is a global organization which was set up for evolving measures to be taken by financial sector businesses and certain non-financial businesses and professional for prevention of money laundering. So this is FATF, that is Financial Action Task Force, is a global organization. And what does this organization do is that they come up with guidelines so that financial um, money laundering can be prevented. And because in money laundering, financial institutions are being used to clean the money. How this is done, we will see in the subsequent uh, slides, that how the dirty money is converted into clean money. So understanding this money laundering, terrorist financing, and the role of FATF is very important. That FATF will come up with evolving measures that financial sector has to take, or certain non-financial businesses as well, for prevention of money laundering. Now, the stages through which this dirty money is converted into clean money is is a process of money laundering, and there are stages through which it goes through, and this money gets clean once this process gets done. So this is collection of dirty money. As we have seen in the previous slides, that dirty money will be mo money which is generated through criminal activities like trafficking, gun smuggling, or corruption. So dirty money is money which is generated by criminal activities. And we have seen what kind of criminal activities. It could be smuggling, it could be drug trafficking, corruption, etc. So these kind of dirty money, how will they put up in the financial system? So the first step in money laundering is placement. It is called placement. This dirty money is integrated into the financial system, and how this will be integrated, that the dirty money will be put up in banks or any other financial institutions through various accounts. There will be various accounts in different banks and financial institutions, and those dirty money are deposited not in lump sum. They are usually very small transactions which take place, and through multiple accounts, multiple fake accounts. That is why when we talk about money laundering, KYC comes into play. That you can stop this money laundering at this step only, at the placement step only, if you have taken the right KYC and you have followed the instructions of the bank, that you have verified all the KYC documents properly, and you ensure that all the KYC documents, all the accounts that are being opened in your branch are KYC compliant, and you have checked all the originals, and in some of the cases you have to get it verified also on the sites like Aadhaar card or PAN card, so that you know that the person is a right person. So here the role of KYC comes into play, because this dirty money is placed into banking system through various accounts. Various fake accounts are opened. Then the second step is layering. In the second step of layering, they will do multiple transactions. Like suppose they have opened 10 accounts in the name of A, B, C, D. For simplicity, I'm taking 5 accounts. Now they will do multiple transactions from each account. There are multiple transactions which are being carried from each account, and these are obviously small transactions so that it doesn't get noticed. And in that way, it will be transferred in so many different accounts in so many different banks, that its origination, it will become very difficult for the banker or any organization to find the source of that income. So first of all, the first step was placement, where the dirty money was placed into different banks and financial institutions through various fake accounts. These fake accounts can be in the name of individuals or firms. Then second step is layering, where uh, these are routed through various transactions. There are various transactions the customer do, so that the the origin of the money gets eliminated, and it becomes very difficult for any organization or any person to find where that original money had came. And the last stage is integration. And integration, because multiple transactions have already taken place in the banking system, the dirty money has already converted into white money, and now the integration will happen that it will be again routed to a single account so that they can now buy some luxury asset, financial investment, or commercial industry investments can be done through those accounts, and this process is known as integration. So dirty money, from dirty money, the first step was placement, second step was layering, and the third was integration. And with this becomes clean money. So these are stages of money laundering. Now comes stages of financing of terrorism. What is the stages of financing of terrorism? First is raising. First will be raising the money. So through this process, the organizations will first of all raise the money through various sources. Then it will move the money. Second will be moving. So moving and storing, these two steps are interlinked and they come under layering. So you can see from raising to moving, it is the placement, and from these two processes will come under layering. So moving, and third is storing. First, the amount will be raised from any of the criminal activities. Then it will be moved through various accounts. Then it will be stored at different places, and before it is used for any finance, for any terrorist activity, they will spend. And this step will be come into the integration part. So these are the four stages of financing of terrorism activities. Now, what are the objectives of prevention of money laundering? The main objective of measure of prevention of money laundering are to prevent criminal elements from using the financial system for money laundering activities. So as a banker, what is our responsibility? Our responsibility is to stop these criminal elements from using financial system. Financial system could be bank or any financial institution, insurance company, where they can park their money, dirty money, and they will convert it to clean money, and that clean money can be used for financing terrorism. So that is why it is very important for bankers that we take proper KYC, we follow all the KYC guidelines as given by RBI and the bank. And so the first objective of prevention of money laundering is to prevent criminal elements from using financial system for money laundering activities. Second is to prevent spread of criminal activities in society. We have to, because banking is such an integral part of society, that this also is one of the objective, that as a banker you have to be very vigilant and you have to uh, stop the spread of criminal activities in our society by taking right KYC, and that is why KYC is such an important topic for all the bankers. Third objective is to safeguard the economy from financial crimes. We This also lies uh, under the purview of bankers, that we have to stop the financial crimes, and in the subsequent when you will study this particular unit, you will get to know that we have to do various kind of reporting. If there is multiple transactions, if you have any kind of any doubt over any account or any person, then you have to report that also, so that money laundering can be prevented. So third objective is to safeguard the economy from financial crimes. Fourth is to prevent terrorists from gaining access to financial resources, because once they have placed the money and they start the layering process, then they will have access to financial resources. And that is why fourth objective of prevention of money laundering is to prevent the terrorists from gaining access to financial resources. Now comes AML framework in India. So how does this AML works here in India? And this is very important that we have to understand that what is the role of different organizations which will help in containing these terrorist activities, and how we can prevent the money laundering, and which are the organizations which will be responsible and who will be giving the guidelines for various various guidelines related to money laundering. So let's see this. AML framework, first is Financial Intelligence Unit India has been set up, and what is the role of FIU? FIU will receive information about various financial transactions from certain businesses, including bank and financial institutions. So we have to do multiple kind of, there are different kind of reporting that have has to be done by the banks and financial institutions in case of any doubt, or in case of there are few cash transactions that have to be reported to Financial Intelligence Unit. Second comes Enforcement Directorate. What is the role of Enforcement Directorate? They will do the investigation and they will prosecute any person in case of they are found guilty of money laundering crime. So investigation and prosecution of the guilty will be done by Enforcement Directorate. Special courts. There are special courts for adjudication of cases pertaining to money laundering crime. The adjudicating authority has power to freeze the assets and even confiscate the asset proved to be related to money laundering. So special courts will have the power that it will adjudicate all kind of cases which are related to money laundering crime, and adjudicating authority will be the, and this special court will have the power to freeze the assets and even confiscate the assets that are proved to be related to money laundering. Regulators and various business activities, issues in various regulators. We have regulators like, we have different regulators for different, like RBI is regulator of banks, SEBI is regulator of capital market, IRDA is regulator of insurance, so, and PFRDA is regulator of pension funds. So all these regulators will come up with operating instructions and guidelines for business regulated by them to prevent money laundering. Now comes money laundering offenses. What will happen if any money laundering offenses are being detected or found? Then what are the criteria and where they are defined in? So, money laundering offenses of money laundering has been defined in Section 3 of PMLA. PMLA is Prevention of Money Laundering Act. This is Prevention of Money Laundering Act. Section 45 of PMLA stipulates that all offense under PMLA are to be cognizable and non-bailable offense. So Section 45 defined as non-bailable offense. Section 3, the offense of money laundering is defined in Section 3 of PMLA. Section 4 of PMLA stipulates punishment for money laundering offense, which is rigorous imprisonment for not less than 3 years but up to 7 years and fine as per the gravity of the offense. So the guilty will be punished, or they can get imprisonment not less than 3 years and up to 7 years plus fine. And fine will be as per the gravity of the offense, that how severe the offense was. According to that, there will be fine. In cases connected with offences under the Narcotics, Drugs and Psychotropic Substances Act, the imprisonment may extend up to maximum 10 years. So in case if it is related to narcotic drugs and psychotropic substances, then this imprisonment could be up to 10 years. Now, risk management. Risk management, we all know that there are various kind of risk that a banking business has. And so understanding risk business is also very important. Risk-based approach means bank shall apply a risk-based approach for mitigation and management of the identified risk and should have board approved policy. To mitigate all kind of risk, every bank will have a risk-based approach. Like we have credit risk. Credit risk is where you have given loan to a customer and customer is not repaying you back. There are operational risk. Operational risk is that you have taken a fake KYC document and you have opened account. So this will come under operational risk. So if every bank, board of the bank will approve policies so that there is a risk-based approach through which we will work in the bank. Second is risk assessment. Assessment means that you have to assess that what will be the severity of any kind of what could be severity of any kind if we don't follow the guidelines given by the bank. So bank should undertake assessment of and take effective measure to mitigate the money laundering and terrorist financing. ML is money laundering, money laundering, and TF is terrorist financing. So bank has to undertake assessment and take effective measures. Like effective measures is what? Effective measures is like bank gives you guidelines that you have to check all the original documents of the KYC. Bank gives you guideline that you have to check those KYC documents through various sites and you have to confirm that the documents which are being provided by the customer to you are correct. The informations given are correct in the application form. So these are some of the assessment which the bank has to do and also take effective measures for that. Customer risk categorization. We have to categorize customers in 3 risk categories, namely high, medium, and low based on the risk perception of the bank. It will the perception of the bank, that how they will categorize the customers. Suppose we are opening account of a government employed person who is on a very reputable business, not business, if he is on a very reputable designation, then we consider the customer as maybe low risk, and or any person whose income is not very high. It could be maybe farmers and small farmers, they could be considered as low. So it is the perception of the bank which will, on which you have to decide that whether the customer is high risk, medium risk, or low risk. Now comes role of other functions. Concurrent and internal auditors shall specifically check and verify the application of KYC ML procedure at the branches. Concurrent auditors are auditors who uh, who are present in the branches or some of the CPCs, and they regularly check all the activities which are being done by that particular branch or that particular CPC. So those concurrent auditors will check whether KYC ML guidelines are being followed in the branches or not. Internal auditors come to our branches and they do the audit work. We have some time period after which internal auditor will come, and during those audits also KYC and AML documents are checked. In some of the cases, it is specifically they do the only the KYC document checking, and it is done so that the auditors are also can give the report that the branches are following, all the staff of the branch is following the KYC guidelines of the bank. Introduction of new technologies. Banks should build in appropriate KYC procedure before introducing new product, services, or technology. So we all know that in last 15-20 years there has been major shift in technology in the banking sector. So any technology, whenever it is being introduced in the bank, it has to be properly checked that even we are providing various kinds of facilities to the customer, but KYC guidelines should never be taken lightly. And first of all, the bank has to decide that these technology, these new changes, these new product or services which the bank is offering, it is not hampering our KYC guidelines. Staff hiring and training. Bank should carry out due diligence and KYC in respect of third party used for business activities like business correspondence, direct sale agents, recovery agents. So for various purposes, bank hire business correspondents. Business correspondents are hired for opening various kinds of account or to do small transactions in rural areas where bank branch is not available. There are some direct sales agents which also work for on behalf of the bank. So we have to ensure as a banker that they are also following all the guidelines of the KYC, because that has to be reported to senior authorities, and RBI and other organizations can also come and check that whether these are being followed or not. So before handing over any kind of work to them, we have to be due diligent, and we have to be very meticulous that these agents, recovery agents or direct sale agents or business correspondents, are following all the criteria, all the guidelines which are being given by the bank regarding KYC and AML. So let's do some questions regarding what we have learned till here. Which of the following is not true? Money laundering is a process whereby the origin of funds generated from criminal activities. Corruption, tax evasion, Ponzi schemes, other financial crimes, cyber crimes are closely connected with money laundering. CFT, a global organization, was set up for evolving measures to be taken by financial sector businesses. Money laundering and terrorism financing are considered as criminal activities across the world. So right answer is all are except, sorry, the options are all are correct except one, all are correct except three, one and three, and two and four. You have to pick the answer which is not true in the case of money laundering related things which we have studied so far in this particular unit. Which of the following is not true? Money laundering is a process whereby origin of funds generated from criminal activities, corrup corruption, tax evasion, Ponzi schemes, other financial crimes, cybercrime are closely connected with money laundering. CFT, a global organization, was set up for evolving measures to be taken by financial sector businesses. Money laundering and terrorism financing are considered as criminal activities across the world. And the right answer is all are true except three, and it is not CAFT. We have seen this is FATF, which is Financial Action Task Force. It is a global organization which was set up for evolving measures to be taken by financial sector businesses. Next question is choose the correct sequence of stages of financing of terrorism. Moving. Contributors to the terrorist organization can be located anywhere, and these funds are therefore required to be moved to the places of the establishment of the terrorist organization. Raising is terrorist organizations source funds from their sympathizers, both individuals and organizations. Using the raised funds are used for purpose of carrying out the Terrorism Act or for various organizational related activities. Storing funds are parked in the interim in bank account or any other financial investment. Answer options are 1234, 2431, 3412 or 2143. Choose the correct sequence of stages of financing of terrorism. Moving, raising. These are the definitions which are given for helping you out. But sometimes you'll not get an option of that definition will be given. I have picked some of the questions that can be of different kinds. So what will be the sequence? So the sequence will be, first of all, we have seen it is raising, then comes moving, then will come storing, and then using that money for terrorist activities. So raising is 2, moving is 1, storing is 4, and using is 3. So right option is 2143. Which of the following is not a stage of money laundering? Placement, layering, raising, or integration? Which of the following is not a stage of money laundering? Hello everyone. Okay. So what will be the answer? Right answer will be C. Next is match the following and choose the correct sequence. Placement, layering, integration, the funds lying in multiple accounts in one or few accounts that are then deployed for investing in some legal business activity or for acquiring some asset in legitimate manner. In this stage, funds from criminal activity are introduced into the financial system. Funds are passed through numerous financial transactions in these accounts, creating several layers of fund transfers. 1C, 2A, 3B, 1B, 2C, 3A, 1A, 2C, 3B, or none of these. So placement is a stage where criminal funds from criminal activities are introduced. So it is 1B. Layering is uh, the process in which funds are passed through numerous financial transactions in these accounts, creating several layers of fund transfers. So it is C, and integration is in multiple accounts, it is then investing in some legal business activity and for acquiring some asset in legitimate manner. So it is 1B, 2C, and 3A. So the right answer will be B. Next is choose the answer in respect to AML framework in India. Financial Intelligence Unit has been set up for receiving information about various financial transactions from certain businesses, including bank and financial institutions. ED also has supervisory powers over the business entity that are subject to PMLA. Enforcement Directorate is the investigation and prosecuting authority for money laundering crime. High Court are adjudication of cases uh, pertaining to money laundering crime, and the regulator of various business activities governed under PMLA issue operating instructions and guidelines for businesses regulated by them for discharging their obligation under PMLA and PMLR. So options are all are correct except 2 and 4. 1, 2, 3, 4, 1, 3, 4, 5, or all are correct except 2 and 4. So this is not ED, it is the FIU. And We have not high court, it is special court are there. So the right answer, all other are right except for 2 and 4. So the right answer will be D. Now, which of the following is not correct in respect of money laundering offense? The offense of money laundering has been defined in Section 5 of PMLA. Section 45 of PMLA stipulates that all offences under PMLA are to be deemed to be cognizable and non-bailable offence. Section 4 stipulate punishment for money laundering offence, which is rigorous imprisonment for not less than 3 years but up to 7 years. And in cases connected with offences under the Narcotic Drugs and Psychotropic Substances Act, imprisonment may extend up to maximum 15 years. All are correct except 1 and 4. 1, 2, 3, 1, 3, 4. All are correct except 2 and 4. So it is not section 5, this is section 3. And in narcotics, drugs, and psychotropic substance, the maximum years is 10 years. So all are correct except 2 and 4. So 2 and 4 are not correct. Sorry. It is not 2 and 4, it is 1 and 4. A is the answer. So 1, section 3 is, section 5 is not correct, it is 3. So 1 and 4 are not correct. So that's it for today's session, champion sessions, where we are bringing you concepts as well as questions, and we have already launched our batches on Adda 24/7 for May 2025 exams. So please, if you want to, if you are preparing for your JIB exams, first of all download the app, Adda 24/7 app, because you'll be getting a lot of information regarding your promotion exams, JIB and CIB on the app. And after downloading the app, go to the all courses and join JIB 2025 course, and follow us on all the channels, as well as follow this particular channel, which is Adda 24/7 JIB English Medium, and will be bringing you a lot of information regarding your exams. And we are also bringing you this champion series, where we'll be discussing the concepts as well as some of the questions to give you a glimpse of what kind of study you have to do to clear your exams. And start as early as possible, because you'll get a lot of time to understand the concept. And especially if I talk about principles and practices of banking, then it is very vast. It is not easy to study in 1 month. There are around 55 units in PPB itself. So start your preparation, and with this, thanks a lot for watching this video, and please do like and follow us for more.